Hello Sector Watchers, welcome to the show. This is the 108th episode of Sector Spotlight for Tuesday the 14th of December, and I'm recording it on Monday the 13th. As a matter of fact, I'm recording it on Tuesday the 14th because it's already after midnight for me, but in the US it is still Monday the 13th, after the close I have to say. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands as usual. If you'd like to stay in touch, reach out to me, please use any of the handles on the screen. The plan for today is that we will have our usual recap of asset class and sector rotation as it happened last week. We'll try to put that into a longer term perspective, moving from daily to weekly relative rotation graphs, diving a little bit deeper into the sectors. I'm gonna pick one sector and go a little bit deeper, go into the industries and see what we can learn from that. And then I'd like to wrap up the show with a look at the international rotations of various stock markets around the world. So without further ado, here is Sector Spotlight. Let's kick off with rotation for asset classes as it happened last week. We have the daily RRG on the right and the weekly on the left. Now, these are 6 trading days, so that includes today's price action, Monday to Monday, including Monday. And what we see if we look in the table is that it looks like it was a really nice risk-on week with real estate topping the table, followed by GSG commodities and then the stock market ITOT. The benchmark was up 1.4%, and there was a bit of a difference between GSG and DJP, both commodity ETFs that we're tracking here. Nevertheless, all in all, a nice and good week for risk assets, so to say. And you can see that when you look in the tails, especially ITOT moving higher. And then you can see GSG picking up a lot of momentum. It's still far on the left-hand side of the RRG, which means that it is in a relative downtrend versus VBINX on a daily scale. But we'll bring that into the weekly perspective a little bit later. Here is real estate pushing nicely into the leading quadrant at a strong heading, so that is going well. ITOT in lagging on the daily RRG, picking up relative strength, relative momentum. So we have to see if this rotation can continue in favor of stocks, that is. And then we look at the tails for fixed income asset classes, fixed income assets, which is high yield here, government bonds and corporate bonds. And as you can see, they're in leading. They had a good week prior to last week. And they're now starting to roll over inside that leading quadrant, sort of ending that hiccup. The US dollar lost some of its value, but the trend is still higher and the trend is still up. We're going to take a look at the euro-dollar graph a little bit later on. Now, if we move to the weekly RRG, then we can see that these long tails are for both commodity ETFs, GSG and DJP. Basically, this set of RRGs tells you that the long-term relative trends for commodities are still up. However, they are going through a short-term setback as it stands right now. So we're inside weakening on the weekly. We're losing relative momentum versus VBINX. That is why both tails went into the lagging quadrant in the first place, and they are now starting to pick up relative momentum. So what we need to keep up these long-term uptrends in commodities is for these tails on the daily to continue their improvement on relative momentum, move into improving and then all the way back to leading, to basically pull these two tails back up again and make them hook back up into the leading quadrant to continue their long-term relative uptrend and the turnaround that we've seen there. Too early to make that final call, but the fact that both tails here are turning higher, I think is a good sign, and it gives these two tails here on the weekly a good opportunity. And there is a little bit of time, because they are highest on the RS ratio scale, so there is time for them to first slow down. That is what's happening right now, that the distance between those dots become smaller, and then for those tails to turn up while inside the weakening quadrant and move back into leading and continue their relative uptrend. Here is the cluster of fixed income ETFs, fixed income assets. They slowed down a little bit, as you can see, over the last few weeks, and that is because these tails on the daily went through improving into the leading quadrant. That move now seems to have come to an end, and they are starting to lose relative momentum again, which will eventually, if this continues, push those asset classes deeper into the lagging quadrant. Now, the risk assets, real estate and stocks, ITOT and VNQ, as you can see here on the daily, they both continue to rotate at a strong heading, and now both are actually inside the leading quadrant, and that is backed up by ITOT to a lesser degree. The stock market needs a little bit more work because it needs to go back to the right hand side of that RRG here. But the real estate, so VNQ, is already nicely pushing into the leading quadrant. So definitely strong outlook for real estate in coming weeks, I think I should say, followed by stocks. They're still in their relative uptrend. Now, a couple of charts that I want to highlight here. I already told you euro dollar, or the dollar strength, euro weakness. I think this is actually a pretty good technical pattern scenario that's unfolding. We spoke about that big head and shoulders pattern a long time ago already. I think we started talking about that somewhere in July. And you can now see how that is working out. This is the weekly graph. I had pegged the target for this move around 111, slightly below, so 110.70, 111. We're not there yet. We haven't touched that yet. We dipped at 111.86. So the big question is this already the move that we could expect based on euro dollar, and is this it? And are we now going to go higher? Or do we still need to see a leg lower? Now, I think that this qualifies as a downtrend. So the risk for an all of a sudden strong rally of the euro versus the dollar, I think is not too great. I think that the dominant trend here is dollar strength and euro weakness. If we look at the daily version of euro dollar, and you see that same trend, oh, you should not miss the holiday savings. I think I already know that. But if you're not a StockCharts member, go get this deal. It's a pretty good one. Anyway, this is the trend that we were talking about. And you can see that we're now building this sort of a triangle-like formation. And as you know, triangles can go either way. They can break out on the upside, and in that case it would be a reversal, or they can break down on the downside, and then in that case it would be a continuation pattern. So no way to tell, we just have to wait and see. However, when it breaks out on the upside, I think that the upside potential is fairly limited. There's a good support, old support, now resistance level around 115, and that also happens to be the level of that downsloping resistance line. So if we break out of this triangle on the upside, I think the potential will be only towards 115, and then that longer term downtrend kicks in. If we break out of this triangle on the downside, then I think that 111 area that we had on the long-term chart definitely becomes a possibility, and potentially even lower. Finally, the last chart that I want to share with you from the asset class perspective is the comparison between stocks and bonds. Because you can see in my chart list here, I had the I thought Gov from 2012 to 2016. I showed that to you guys. I think I started doing it after the election in 2016 to show that we actually had this massive break above overhead resistance and then the follow-through rally. And I then had the same chart at the end of 2020 when we were breaking here. And I started showing this chart as some sort of a comparison between two election years. Now what I did here is, here you see the breakout in 2016, and you see the nice rally in 2017, and then sort of a still good but more sideways move, and then a dip at the end of 2018. So here is our 2016 with the breakout and the good move up in 2017. And as you can see, we had a nice rally at the end of 2017 into 2018. And if this scenario plays out, I'm not a big fan of comparing those moves, but I thought it was interesting to look at. Nevertheless, I still think, without knowing all of this, that this ratio still looks good. We're moving higher. We lost a little bit of our slope. I think we should be okay with this at least towards the end of the year and possibly going into the new year. Hence, still continuing to favor stocks over bonds. And I think that is the most important message from an asset class perspective. We still love stocks over bonds, and we still like the US dollar over the euro. Let's jump to sectors in the stock market. Right hand side daily, 6 trading days, so just like the previous one, Monday to Monday, including Monday. And here we have the last 5 weeks. It was a good week for the stock market. S&P up 2.9%, so that was a good week. But if you look at where the performance is coming from, then you can see it was pretty much all in the defensive areas. So staples, healthcare and utilities. These are the defensive sectors, all coming out on top of the S&P, with staples even up 5% in the last 6 trading days. And then we have real estate, which is a defensive sector, popping up very nicely actually. And then sensitive technology also doing really nice. And you can see the tails here and technology actually dropping into the weakening quadrant, but nevertheless the performance was still fairly good. And you can see how nicely, look at that tail, look at how that tail rolls over, and then it starts to compress, to shrink, where it sort of stabilizes around that 100 level on the momentum scale. That indicates that the trend is stable, that it's a relative uptrend, it's a stable uptrend, but there's not enough power behind it. Compare that to the negative power that's in discretionary and the positive power that we've seen here in the defensives. Now, I think it's a little bit too early to say that we have a rotation to defensives going on, but we do have to keep an eye on it, especially when we bring in the weekly RRG that's on the left-hand side here, because we see the, let me highlight them here. So we've got utilities here. So that is rolling up and already moved into improving. We have staples almost overlaying on utilities. There's a slight difference, but the pattern is the same, a little hook and now moving into the improving quadrant. So that's an interesting rotation to look at. However, it's still on the left-hand side of the graph, meaning that the weekly chart, the weekly RRG is still showing a relative downtrend. And we have seen the move into leading here, but look at utilities, it's already starting to lose relative momentum. So here, the interaction between the two charts is important to monitor in the coming weeks to see whether this loss of relative momentum continues, putting the sectors like healthcare, staples, utilities into weakening and back into lagging, which will very likely cause a rotation inside improving back to lagging if this preference for cyclical offensive sectors continues, because that is still the bigger picture, that we are in a time where we should favor cyclical offensive sectors. Nevertheless, it's a little bit of a warning signal, something to keep an eye on. Technology still doing very nicely, moving into the leading quadrant. You see what I just told you about the shrinking here of that tail on the daily. We see a similar thing here on the weekly. It's not the strongest of tails when you look at the tail length, but it's very stable and it's moving in the right direction. So that is a good thing. And then the one sector that I want to show you here is materials, that continues to move higher on a weekly scale, which is a good thing. And we went through a little bit of a correction here on the daily, where the materials sector, the tail moved into lagging, but almost immediately started to pick up relative momentum. but more importantly, not really lose on the RS ratio scale. And that's what you see translated here. This weekly tail continues to move towards that leading quadrant. So the materials sector, definitely keep an eye on from a positive perspective. I do like the way technology behaves, and I certainly like the way real estate is behaving and starting to move towards a positive area. It's now starting to hook back up, starting to pick up a real nice strong RRG heading, and it's following the move that we here see on the daily. So if we translate that into some individual charts, then here is the materials sector. We still do need a little bit of help here, a little bit more work to actually push beyond this high here. We tried it, we dropped back. This old resistance line started to act as support. It's not fantastic, but I put it in there because it nicely lines up. But we would like to see moves above 90 for XLB to actually push that sector higher. And that will eventually complete that bottoming formation here in relative strength. That is needed to bring that tail on the weekly into the leading quadrant and make materials one of the leading sectors. Second chart of the sectors that I want to show you is technology. Very quickly, because we've seen that chart so many times. But the reason I want to bring it up is because it is holding up very well above that old resistance level. It's kept it under wraps for about a year, almost 12 months of no performance in relative terms for the technology sector, and that is now starting to move higher. It's not at a fantastic pace, but it is moving higher very gradually, very steadily, and that's what makes that short tail moving deeper into the leading quadrant. And that's certainly helped by the uptrend here in price with the higher low being put in, and we're now challenging the all-time highs again. So as long as that pattern and that rhythm stays up, I think we will still be good with the technology sector. And then finally, the real estate sector. I think that is probably, you know, if I would have a sector of the week in the program, which we don't have, then I think that this week it would be the real estate sector. Why? Because it is breaking above its previous high. That is a good thing. So we're unlocking new upside potential here from a price perspective, and that will very, very likely start to help that relative strength to finally break above this horizontal barrier in terms of relative strength. The RRG lines are ready to do it. They are almost breaking above 100, which will push this tail into the leading quadrant. Now, from that real estate sector, I would like to dive into the industries, because the real estate sector is a big sector. Well, not in terms of capital weight, but there's a lot of groups in there. And I'd like to have a look at which groups, which industries in real estate are worth spending some time on. And in order to do that, we look at the RRG that shows us the groups that make up XLRE. So these are the industry groups, the industries that together make up the content of XLRE. Now, let me put that to a 5-week period and look at the rotation. And this is all versus the S&P 500. So here is XLRE versus the S&P 500, and here are the industries versus the S&P 500. And you can see XLRE also included on this chart. Now, you can see that there are a few groups that are really better avoided. And the one that springs to mind here is the Real Estate Services Index. That's definitely a group that you would like to avoid. But where is the good stuff? The good stuff is when it moves into the leading quadrant or right to it. And then you see that the choices are getting slightly limited. I think there's one group that really stands out. That's the industrial and office REITs. That is the group with the nicest tail. It's pushing into the leading quadrant. It already had a nice run up, moved through weakening, moved back up, and is now underway for a leg higher inside that existing relative uptrend. And the other one, so this is already an established trend. If we look at what's in the improving quadrant, then EH, so that is real estate holding and development, is moving in the right direction. It's still low on the RS ratio scale. That makes it a little bit dangerous. So this is a little bit more of a gamble. That's a very early call to take. And then the one that is already in a relative uptrend and moving higher, that's the one here in the weakening quadrant, but already moving up and picking up relative momentum again. And that is the US Residential REITs Index. I am planning to write a blog article about this group, about the real estate sector, and see if we can find some interesting individual names later this week. So stay tuned if you're interested in the real estate sector, the REITs that are in it, and the various industry groups. I want to leave it at this for the sectors, and then we're going to wrap up the show with a look at international markets and their rotations versus the world index. This is an RRG that shows you major stock market indexes around the world. Some are country specific, some are more regional. And if you look at the 10-week rotation, so the performance over the last 10 weeks, these tails are 10 weeks, and you see that the S&P comes out on top of that list by quite a big margin. S&P gained 6.3% over the last 10 weeks, while the Dow Jones Global Index only picked up 2.7%. And if you go look at the bottom of the list, and you can see that Brazil, but Russia has lost almost 17% over the same period. So that spread is massive. So it doesn't really mean that if stock markets go up, that they go up everywhere around the world. So from time to time, it makes sense to take a look at what's happening in other parts of the world. Now, I'm going to shorten this tail to 5 weeks because I think it gives better visibility on the chart. And I want to highlight a few. So the one thing that I think that stands out in this chart is the tail and the rotation for the S&P, for the US stock market. This is the only one inside the leading quadrant at a strong heading. The other one is Indonesia, but it's already coming down. And it's a relatively short tail compared to the rest of the universe, because S&P is a big part of the Dow Jones Global, but nevertheless. So the US, I think, stands out at the moment as probably one of the strongest, if not the strongest stock market in the world. Now, what other tails are worth looking at? I think the first one is we want to see what's happening in Europe. So Europe versus the US. It's a very short tail, but it's on the left-hand side. It's picking up a little bit, but not much. And if you look at the chart of the European index, this is the Dow Jones Europe Index, you can see that the European market is pushing against its all-time high, and it's having trouble breaking that, where we know that the S&P has already broken that a long time ago. And look at the relative. That's still a very strong underperformance versus the S&P 500. So for the time being, I think that trend favoring the US over Europe will continue. Another big relationship that's worth looking at is the one from Russia. Because if you look at the tail here, then that RTSI tail is inside weakening, but it's rapidly approaching the lagging quadrant. And if we look at the chart here, then we can see why. Because this relative strength just rapidly breaks down, and it is happening also in the price chart that it is breaking down. So for the next couple of weeks, I expect a strong underperformance, continuing underperformance for the Russian market. The tail that is very close to it is India, the CNX, the Nifty 500. But look at the position on the RRG. They're very similar in nature. But the price chart and the constellation of the RRG lines and the relative strength is quite different. This to me much more looks like a pause, because that trend is still going higher. That relative uptrend is still intact. We're going through a little dip here. So we're going to look for the Nifty to turn around back up inside the weakening quadrant and picking up, potentially following the S&P 500 higher. And then the one that maybe the outsider, I think, is China. It's inside the lagging quadrant, but if you look at the rotation of China for the last, this is from here. Look at the rotation, and I'll give you the chart here on the right hand side. See how this rotation pans out. It moves, goes into improving, and then you see this rotation continuing on the left hand side of the chart. And these are the the hiccups and the rotations that you see here around that 100 level. And what's more important, that China index, the Shanghai Stock Exchange index, is on its way. It's struggling with that overhead resistance, but when it breaks, it's got massive upside potential. It's not going to all-time highs because they are much higher, but you can see here that when it breaks that 37, let's say 37.50, there's quite some upside potential for China. So I'm going to watch China as an outsider in a positive way, and I'm going to watch Russia as an outsider in a negative way, while the S&P continues to lead the world. Ladies and gentlemen, this wraps up Sector Spotlight for this week. Thank you for watching. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern, and I hope to see you again next week, same time, same place.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.